So I just want to bring your attention to the British pound versus the Australian dollar. It's been a long time since we traded this pair, but we have finally, our patience has finally paid off because we do have a decent looking setup based on a number of factors actually. So last week closed as a bearish pin bar reversal, giving us an entry point to potential sell. Now there are a number of factors in support of a potential sell move for the next week, 2 or 3 or month or 2 or 3 even. So let's discuss these. We've got a potential double top formation here on the weekly time frame. As you can see here, we had the spike just testing 1.800, and we have the second spike testing 1.800 at the top of this range here. What is more is the fact that if we drag our Fibonacci retracement tool from the very start of this Brexit move, should I say, where the British pound absolutely crumbled against pretty much every other pair out there known to man, we can see that we've tested the 50% Fibonacci retracement for a second time here. There we go. The last time we tested it was quite recently, early December last year, and we've now tested it again. What is more, we've got bearish reversal divergence where price, as you can see here, this bearish pin bar reversal closing last week has made slightly by a couple of pips a higher high than the high seen in early December last year. But despite that, we've got a lower high on our relative strength index setting 6. There we go. That's a sign that the bulls are starting to wane in their ferocity to the upside. Okay, so that's quite a good little hidden clue. Our third criteria, or third clue, should I say, in this murder mystery, is the fact that we've got a completion of an ABCD pattern into this level as well. So if we look at this from the perspective of A to B equaling C to D, we can see we've got great symmetry, and that's exactly what we look out for when we're trading ABCD patterns. So point A to B, let's copy this and see if it essentially equals C to D, because that gives us a great potential turning point. And we have it. Complete symmetry here. A, B, C, D. Not only does it work in terms of length, but also angle as well. So that is a great completion point. And the fact that we've got a bearish pin bar reversal punctuating the move to the downside gives us extra certainty. One extra clue. It's seasonality. If we look at our friends at Equity Clock, we can see that over the past 20 years on average, I know 20 years is not scientific, but we can see that traditionally the British pound has been bearish throughout February and the early parts of March. So we compare this to the Australian dollar as well, and we can see how exactly the Australian dollar has fared in general over the equivalent time. Now, the Australian dollar, in comparison, if we look at the start of February, throughout mid-February and early March, we can see that in comparison is pretty bullish. And that is a stark comparison to the British pound, actually. So you can see that here, from the start of February, it's gone up, hesitated, but March is where it really does shoot up. And that is the historical kind of modus operandi of the Australian dollar over the past 20 years. I know we need 50 years for it to be slightly more scientific, but it is an extra heads up, really, when we look at the clues. So there we have it. So in order to trade this currency pair, all we need to do, we're going to trade this as a standard entry. We're simply going to trade the break of the low of last week. So we're going to place our entry just below the low of last week's bearish pin bar reversal, stop loss above the high, and if we're triggered into the trade, we will simply just let it go. Okay, if we're not triggered into the trade, we will see exactly why. If price doesn't trigger us into the trade and it breaches the high of last week, then that invalidates the trade. If it closes as an inside bar, then we'll take a second view and we will talk to you exactly about what we're going to do next week. Okay, because guess what? When we trade the weekly chart, we don't look at the trades during the week. We look at the trades at the end of the week.